Good evening, everyone. My name is Brian, and welcome to Copycat Trading. Today is Wednesday, January the 17th, 2024, and this is your daily market brief. All right, we're going to start off with the Spiders chart, and Spiders had a down day again today. It's getting pretty interesting on the market action. The way it's going is down 0.56%, so a little over 0.5%, and I'm watching a line that is occurring here, coming back all the way to November the 14th and stretching up here amongst these lows. And you can see that we barely touched it today and then popped back up. Not barely, we actually pierced it today and then popped back up. And this matches up with these highs right up in here. So it's a good parallel channel. But it challenged it on this date here on January the 5th, and then it challenged it again today and pierced it. And usually whenever you hit, we got 1, 2, and then the third hit here, actually first, second, third, fourth hit. Usually on the fourth hit, the trend line begins to get weaker, and so we'll see what happens whether or not we break down. It was light volume again today, so 67.43 million, which is hardly any volume at all. And so just light volume, and the market just drifted in the same range just all day long. So we were in a very tight range. You can see we had a range from here down to here and up to here, and that's about it. And then we broke out at this point here and then kind of came up. So we might be in a breakout for tomorrow morning. We'll see whether we come back up and test this gap or what. But this is the 10-minute chart. And as you can see, we were just staying in this range. We got rejected off this line again, and then it broke out through it right at the end of the day. Post-market, we're just trading down just a little bit. A lot of earnings going on right now. So we had some earnings plays and trades this morning, and I'll see if I can, I didn't get any of them, but I'll see if I can get a video made for tomorrow, possibly of a day trade that I can post. All right, moving on to the Qs. The Qs are, actually go back to the Spiders here. If we break that line and we begin to come down, your next stop is the 50 moving average. And then, like I said, there is a lot of support down here at this range. And I'll just mark that again on our chart so that we can see what it looks like. And then probably down to here, anywhere in that range, you're going to probably get a multi-day bounce unless we have heavy selling. But that'll kind of give you an idea of where it will stop if we do come down in the Spiders. Otherwise, I still have the opinion if we do not break this line, we still got our all-time highs in sight on the SPY. So the Spiders are still looking at that all-time high about 480 there. And it's going to try to break up there and make all new all-time highs. But we'll just have to wait and see what happens. Right now, we do have a higher high in here. And of course, we still got higher lows depending on where this one stops. And if you look at the weekly chart, and I've got it set up over here, this is nothing more than good bullish consolidation on this up move. So it does look like it is looking to, on the weekly chart, to springboard up and to take out the all-time highs. On the daily chart, not as confident. So we'll just see what happens. All right, going to the Qs. On the QQQ, same exact pattern existed today, and the QQQ basically has, in here I do want to show you that we do have a lower high in the market on the NASDAQ. And so the techs are not as strong as what the Spiders are, but we still have that higher low. So we're still not in bad trouble, and the trend is still up on both the weekly and the daily, so we're still looking good on the QQQ. And it was the exact same pattern on the 10-minute. Going back to the Spiders for just a moment, I do want to still illustrate and still caution everybody that we still have this negative divergence here. We made a higher high, we made a high right here at this point, and then we made a higher high at this point, but yet on the divergence, on the RSI, we actually descended, if you'll notice down here at the bottom of my screen. So that is called a negative divergence, which sometimes has meant in the past, whenever you're approaching a resistance line or a support line, that you're going to get a move in the opposite direction whenever you have those two diverge like that. Now, not to say, and this is not something that you should trade off of by itself. You use that as a tool in the belt just to kind of direct your attention to where the market is going to go. Moving on to the Russell. The Russell did break our flag pattern that we were talking about the last few days. It did break it down yesterday, and it continued down, hit the 50 MA, bounced right off of it this morning. Very beautiful pattern. Classic. It also pierced the 382, so it went to the 382, pierced it through, and then came back above it. So as of right now, it's holding the 382 Fibonacci retrace, and so we'll see what happens over the coming days and see if this is a one-day bounce off of the Russell for the Russell, or if there's a multi-day bounce coming in, and we're going to put in a new short-term low. All right. As far as gold continued to go down today. We were down by 1.1%, and silver, similar story, 1.5%. Still got rejected off the neckline of that head and shoulders pattern. Next, of course, the stop is this low right here, and then after that, you got these lows down here that we'll have to reason with and see whether or not we're going to get through that or not before we continue on. And I've showed you the target for that head and shoulders pattern is all the way down here to about 1947. And if it gets down to around 19, I will probably be putting a double position on silver, because that'll probably be a really amazing low to add to. Natural gas, we actually got down to the level that I was looking for me to add, and so I added at this level last night, or actually this morning early, and we've gotten a little bit of a bounce, but we're right to this support level 251, and as soon as I got down there about 252, I think is where I added on to my UNG ETF that I play the natural gas with. So as at this point, I'm going to take out this particular trend line, and we are going to look for another pattern here, whether or not this bottoms out or continues downward. Whatever the case, it still needs some consolidation before it moves up again. So that's the natural gas. And I'm kind of holding this for a long-term play. If you look at your weekly chart and look at how much space we have here, and let me just reset this chart here to where we actually have a clean view. We're at pretty historic lows. I mean, we had a pretty historic low down in here, but I mean, we're at pretty low lows on natural gas. So this is a continual contract, and so you can see that we're in this area. We've got a long ways to go up and a very short way to go down. So I've got a smaller position still. I actually bought down here and unloaded quite a bit up here. So I'm just adding a little bit incrementally at a time as we go down here. Nothing big, nothing heavy, just trying to build up my position, because I think natural gas has got a long way to run. Oil is in that same exact bearish flag pattern that we've seen for the past 3-4 weeks now, and it's just hanging out in this area. We'll see what happens to it. I like it as far as my car consumption. That's a good thing. But as far as car fuel goes, but at this point, we don't know whether oil is going to break down out of this bear pattern or whether it's going to break up. And usually an upsloping wedge usually means that it's going to break to the downside, and we'll just have to wait and see what happens. Bitcoin is still holding in this range, and we saw it pop up, and then it came back in, and then it jumped back up into this wedge pattern, and it's just chopping up and down in this wedge pattern. And again, this has been there for the last 4 or 5 weeks. Show you something on the weekly side. On the weekly side, you have a really large topping tail on Bitcoin, and a lot of times these Bitcoin or these topping tails will retrace halfway before they roll back over. But until this is taken out, until this high point is taken out, that is a high on the chart, especially based on a weekly pattern. So that is Bitcoin. Going to the semiconductors now. In the semiconductors were down 0.6% after a gap down this morning, but this has always been the strongest, or not always, but the last few weeks it's been the strongest of all the indices. So the semis are still remaining quite strong, and so we'll just have to wait and see what happens in the semi charts as time goes by. But NVIDIA and AMD have just been on fire lately. But you can see that we've got a double top that we hit up here with the semis. This was an all-time high. It came up and hit the double top, and it got rejected off of it. Then we got support in this area that I had marked, and we bounced off of that and have come back up again, and we're about to challenge that all-time high. So we'll see what happens whenever it does go up there. Apple, you heard that I got stopped out of my Apple play yesterday, and we got a bounce immediately. We got about the same repeat today. We got a gap down this morning on some good news, which of course makes the market go down, because good news is bad news if you are going to keep interest rates high, and so that means that the Fed is not going to cut. So therefore, we got a gap down and a push up again on Apple. But whatever the case may be, we are right into a Fibonacci retrace that is a pretty strong Fibonacci. That's a 50%. And I figured we'd hold this 50% retrace. I actually added for the first time as soon as we pierced this 50 MA, added again at the 50% retrace. And so my average was right in here, and then it came up there and then stopped me out yesterday. But anyway, we hit the 50%, so I will not become interested. We're too close to 618 and too much consolidation above it for me to add to it at 618 or to get back in at 618. I'll be waiting until we get down here around 174 before I get back into Apple for any kind of a play there on the short-term swing. Even though Apple, even though it's got all kinds of negative news about it, I still think that the chart is telling us that 174 will probably be a bounce level as long as it doesn't consolidate above it for too long. Tesla is still weak today. You can see we had a pretty good gap down, 2%, almost 2% down, but we're still in this support range, and we've got this upsloping trend line that is support as well. That is been heavy support for it in the past, and so we'll just see what happens whenever it hits here. It's the third hit of this trend line, and so it should bounce back up, but we're not going to have a very big bounce based on what I'm reading. We're either going to have a bounce up here to this trend line, or just somewhere up in here, maybe 50% retrace, and at the ultimate, maybe this trend line. And then it may curl over and do another repeat. We'll just have to see. The Tesla chart does not look all that bullish. If you look at the weekly chart, that's the only thing that's kind of good news. It looks like a thrust up and then a heavy consolidation. But again, you don't have a very good angle for it to be called bullish consolidation. So I'm not too bullish on Tesla right now, but we'll just have to wait and see what happens. As far as NVIDIA pulled back today, so we got a short-term high. But again, what my objective or my thought process would be is that we'd get up to about 585, 586, and then it could consolidate and make another thrust up. There is nothing telling us that the NVIDIA chart is weak. It may make this repeated pattern, which we talked about yesterday, and then kind of make maybe a 50% retrace, maybe a 382 retrace, and then make another thrust up. But NVIDIA is still strong. I would not get in front of it, and I certainly wouldn't jump on at this high of a run. Microsoft, after breaking out of that bullish pattern, it's up, and I'm looking for a retrace back to this line here. If we can get to that retrace, or maybe even retrace to the double top, or a little bit below the double top, and then I might jump on board for a long play on that, just a small position. And then Meta came back and almost came into its 20 MA today, but it didn't. It bounced right back up and had a really good play. If you look at the retrace from this low here, the retrace from that low is almost exactly 50%. It pierced its 50% retrace and then bounced right back up again. And I came really close to playing this gap today, but just missed it by pennies. You can see there's the gap right there, and we just missed it by pennies. Otherwise, I would have jumped on board Meta today as well for a day trade. Netflix had a slight down day today, 0.19%. And nothing in trouble, still strong uptrend on here. And if we're looking at the weekly chart over here on the left-hand side, you can see that we're still kind of in a semi-bullish consolidation. The only thing I don't like about it is this slightly upsloping consolidation, but it is still a pseudo bullish consolidation. So we'll just see what happens with Netflix over the coming days. Google went up as well, and Google's nothing wrong with this chart. It looks nice and powerful. It's got a really strong uptrend on the weekly, and it's got a decently strong uptrend on the daily. So overall, everything is still looking good. I still am under the suspicion that we're going to be trying to go up on the spiders to take out the all-time highs. The only thing that is negative in my mind at this point is that we have a negative divergence here on the RSI, and then also on the QQQ we have not only negative divergence, and really it's really not negative divergence except for right in here, but we have a lower high in here, but we still have a strong uptrend. So I'm really kind of bullish on the market. Markets are still moving up as far as a technical standpoint, and maybe over the coming days we'll talk a little bit about fundamentals, but at this point we're still looking at the technical chart, and we don't let our fundamentals stand in the way of reading what the chart is telling us. All right, guys, I'm going to sign off at this time. I don't think there's anything else that I need to go over, and this is Copycat Trader, and I'm going to sign off. You guys have a great day.